Right, started the recording. Hey guys, welcome back to another video here at FX. My name is Josh, founder of this lovely Discord community group that we do have going here. And what I'm gonna do today is discuss risk management and how this is really the number one tool you have as a trader when it comes to being profitable, staying profitable, and it is what keeps you separated from a blown account and the 90% that aren't profitable as traders, right? As you know, there's only like 6% of people who are actually profitable on a consistent basis when it comes to trading, right? And a lot of this has a large part to do with risk management. So what I'm going to do here is just explain my own risk management strategy, what I do entering each week, and how do I capitalize on the markets when it comes to gaining much more higher yields compared to other traders as well. So I don't know, maybe other traders do this as well, but I haven't seen any evidence of that. This is my personal risk management strategy in order to really fundamentally gain more from the markets while keeping an overall safe amount of risk on the table and off the table. All right, so just to dive in real quick, let's start with an account balance, right? Let's say we have an account balance of a standard, let's say 20,000, right? So we have an account balance of 20,000, whether it's funded or your own personal account. This is our starting capital, right? So we could just put starting capital is equal to 20,000, right? Okay. So entering each week, something that I like to do is risk a minimum amount of percentage in order to capitalize on the few gains that we can at the starting of the week. Something that I do personally is trade right after market open if there are opportunities that are there, right? And this is something that works for some people, I would say, and it doesn't work for others, because a lot of times what we could have happening at the beginning of the market session for the new week is a lot of false moves occurring and things like that. But I haven't run into any of those myself. So honestly, it depends on you as a trader, what you're comfortable doing, what you're comfortable when you're comfortable to start trading and so forth, right? So let's say we have that starting capital of 20,000, and each week I would like to enter with a 3% risk, right? On a funded account, you do have a 5% drawdown overall, but you want to save yourself some risk out of that week to prepare for another week, because you don't know what could happen. The markets could just start moving all over the place and you could hit that 5% relatively quickly. So you need to have some discipline in yourself. You need to instill some discipline into yourself that, okay, if I do reach a 3% maximum drawdown for this week, I would take that other 2% and enter the markets fresh the next week, right? Where you have more opportunities, maybe some moves would have occurred and you see some setups that you wouldn't have seen during that first week period that you were trading, right? So instead of risking all that 5% at that 1 week, right, you want to leave some risk behind, so to speak. You want to leave some risk behind so that you'll be able to enter a new week and, you know, potentially build back up from that initial loss that you did occur with, right? So I like to enter the market, right? Market open Sunday evening with a 3% risk, right? So let's say for the first week, we're entering 3% risk, right? We have 3% risk for this week. This is what we're using, right? And I'm going to show you how this is a scalable amount once you do have a profitable strategy to really gain and maximize your overall profits and yield, and how you could put this 3% aside and really start trading from your profits rather than from the amount of risk that you did have on your initial starting balance, right? So we enter with a 3% risk. Usually when you are trading, you want to risk around 1% per trade, but because it's a new week, we're starting with market open, we want to be able to allow ourselves more opportunities into the market while still having that 3% overall, right? So we divide this 3%, right? So we take this 3% risk and we divide that by 2, right? So we take this 3% risk, right? And we divide that by 0.5. And we divide that by 0.5%, meaning overall we now have 6 possible trades. Right? So we now have 6 possible trades that we can enter into. Right? If you don't understand how that is, it's simple maths, guys, right? So instead of using that 3% risk, 1% per trade, we're now using 0.5, right? So we enter the week, we're going to risk 0.5% per trade, right? And as we gain, we would scale this amount. So we now have 6 possible trade opportunities that we could get ourselves involved in. Out of those 6 times, you should win at least, I don't know, maybe 2 out of the 6 trades that you are taking. If you do have a profitable strategy and you are disciplined, then this would be no issue at all, right? So this would be no issue at all. Once you do have a plan for yourself, then the amount that you're risking shouldn't be an issue, nor should it be taking you after 6 trades to have a winning trade, right? So we now have 6 possible trades. Now let's say we enter a trade such as AUD NZD, right? We enter AUD NZD buy, right? And we're looking for a 1 to 3 risk to reward, right? So for every 1% we're risking, we're looking for a 3% return here on the AUD NZD buy that we will be taking, right? So let's say we took that buy and price played out. Now I'm going to show you 2 scenarios, right? So let's say we took that buy and price played out, right? So we risk 0.5% on AUD NZD, which means we'll have made a total profit of around 1.5%, right? Because now you just multiply that 0.5 by 3, you get 1.5, right? So we made a gain of 1.5%. Now let's say we had another scenario, right? Now let's say we had another scenario where we had that same AUD NZD buy, but price played against us, right? So we risked that 0.5%, we now lost the 0.5, right? So from the initial risk, right, meaning we're now down 0.5%, right? So on one hand, we're up 1.5% and then we're down on 0.5%, right? So on this side here, we now have a total of 4.5%, right? In total risk capital. While on this side here, we now have a total of 2.5%. Right? Now on this side here, if we did win that first initial trade, we can now separate our 3% risk from our profit risk, right? So we're now going to start using the profit instead of that 3%, right? So we now clear ourselves from any possible drawdown that we could occur, because now we can divide that 1.5% into 3, right? Risking 0.5% on the other trades that we are going to take. So let's say we had another trade here, and just using 2 trade examples to really show you guys how this is something scalable, right? Let's say we had GBP JPY, a sell, risking 1 to 3, right? I'm using 1 to 3 really as the standard for your risk to reward ratio, because this is usually what my risk to rewards would be like, at least of 1 to 3 or higher. 1 to 2 is also acceptable. That is the standard industry acceptable risk to reward to be having. You shouldn't be risking 1 to 1, though it is something that could probably be profitable for some traders. Risking a 1 to 1 in terms of gaining 1% for each trade that you do take, and you do risk 1%, can sometimes become something very troubling. So you should get yourself in the habit of making at least 2% return on any trade that you do find yourself taking, and get into the mindset of, okay, I'm looking to double my risk amount by taking this trade. Right, so I take this trade for 1%. I'm looking for a total return of 2%, right? And that usually would help you in terms of if you do encounter any drawdown as you continue trading for the week, month, or whatever, right? You'll still be able to either maintain your overall profitability, or at least if you do take L's back to back, then you're now able to kind of recover from that, or be covered from it, so to speak, because you did have a decent return percentage, or ROI, return on investment, right? So continuing, JPY sell. Let's say we also win this trade right here. Now again, we're using that 0.5% risk. So that means that if we risked 0.5% on JPY, we now have a 1.5% return, right? So we now gain here again on JPY. The same thing would be said for if we took this trade over here, right? We did risk that same amount. We have a now return of 1.5%, meaning we gain here and we also gain here. Now this is how I scale with my trading, right? So this now becomes a total of 6%, right? We have 6% total risk capital. Let me just duplicate this to make it easier on you. And here we now have 3.5% total risk capital. And you see, if you go back and forth and you do have a profitable, trading strategy, then this would only increase for you. Now from this amount here, right? If we're separating our initial 3% risk, we have 3% profits right here, right? From that 3% profit, we can now use and do the same thing over here, right? So risk that 0.5%, build capital. And once we do have a good amount, right? So let's say we build from that 3% risk that we have here, right? Let me just use another example. Let's say we took Euro GBP buy, right, for a 1 to 3. Right, we took a Euro GBP buy for 1 to 3, and we're now risking 1%, right? Because we do have 3% total capital, we could take the opportunity to risk 1% on a highly profitable trade, probable trade, sorry, right? And let's say that your GP met all of our confluences. There's nothing fundamentally that should happen to make the price action go against our initial bias. So we do take that trade on in the Euro GBP for that buy with a 1% risk, right? So let's say we win that 1%. Right, so we risked 1% on Euro GBP, right? And now we have a gain of 3% in terms of our return on that trade, right? So now this amount keeps on rising and rising, and so forth, and we could alternate between risking 0.5% and risking that 1% and keep on growing our capital. If we do occur any drawdown, like let's say we did lose this, or we took another trade and we lost, right? Then we now can fall back to that 0.5% risk mindset, keeping our overall capital safe, right? Our overall profit safe, right? And still have opportunities to scale in on any other trade opportunities that we do take, right? And this is something that I practice in myself and how I maintain my overall profitability. Even though if I do run into some drawdown, it is very minimal because I alternate between a 0.5% risk, 1% risk, and even higher, sometimes 2%, depending on the trade itself and if it allows for that 2% risk to, be basically opportunable, right? So that's how I trade in terms of my risk management. And same thing can go for here, right? Let's say we actually lost this trade, right? So we risk 1%. So let's say we risk that 1%, right? But over here, right, we already are in some drawdown. We occur with a 1% loss, right? So from that 3.5 that we have here, right, we now resulted back down into 2.5%, right? Now we could drop back to you risking 0.5% for each trade that we do take. Again, if you do have a profitable trading strategy, then it shouldn't matter how much, if you're falling behind, another trade or anything like that, because sooner than later, your risk strategy, your trading strategy is going to help you become profitable, or it's going to help you make profit. So you just need to allow yourself for that to happen. Don't let greed or the fear of losing out influence you to deviate from your trading strategy. Because you might see sometimes, if you are in a community, you see someone taking a trade on this, but your analysis on this is different from that person, then don't feel pressured to go with that person analysis, especially if they're like a person that's reputable, or they have winning trades a lot of the times, and you're like, oh wait, what did I miss here? Why they have a buy and I have a sell? Like, how are our biases different, or why does it deviate so much from each other? Do not feel afraid or pressured into entering that person's trade because the analysis is different from yours, right? This is something that I have never done myself. I see a lot of people, a lot of highly profitable people already, post trades already, that deviated from mine, but I stuck with my bias, and it really did pan out for me favorable for me, because I stuck with my bias. I believed in my trading strategy. I didn't deviate from it just because someone else said something else, right? The only way that I myself might deviate from trading idea or setup that I do have is if there's multiple confluences that this person is talking about. If it makes sense to me personally, I would opt to either stay out of the trade, or just stay out of the trade and watch and see what happens. Maybe they're right and I'm wrong, so I can learn from it, or maybe I'm right so I can see where they went wrong and also learn from it, and how to better trust my own biases when I do form them, right? And as you can see, this is a scalable plan, right? So you could risk that 1%, you make 3% return. You now start to risk your profits, rather than your actual initial account starting balance, and so forth. You continue on to do this and implement this, right? So on this side, your capital would be at a 200 drawdown. So that would be, instead of 20,000, you would have around 19,800. Yeah, something like that. Yeah, you have like a 19,800 right here, because you now have a 5% lost, right? Sorry, not a 5% loss, guys. You now have a 1% loss. That 1% came from the profits. So you now have, instead of 3.5, 2.5% in total risk amount, right? Meaning your initial account balance did dip a little bit, and you did have a 0.5% drawdown, right, from your account balance. So this would be your account balance right here, while as this here would actually have been increased by 3 and 6, 9%, no, 6% total, right? So in 1,000 here, it will be 20,000 plus 6%, which is 1,100. Sorry, which would be 1,200. Right, so your account balance here will now have grown to an overall 21,200. Alright, and this is a scalable plan that you can use in order to really gain on your overall capital and continue and protect your trading as you do, encounter any drawdowns as such. Hopefully this makes sense to you guys. This is I think relatively easy to understand chart, right? So this is if you buy and you win. So this is like winning trades. And this is like encountering losses. Right? So both are scalable options. Even if you do occur with some drawdown, you can see how you can minimize that drawdown, as well as if you are winning, then you need to keep in mindset of, okay, because I'm winning, I'm not just going to blindly up my risk. I'm not just going to blindly enter new trades and stuff or gain an ego from it. I'm going to manage my profits, use from my profits rather than my initial account balance to actually continue trading for that week. And you could do this each week, or even scale. If you are using from a personal account, then there's that option to scale, because we could win 9% for this week, right, and enter the new week after that with a 1% risk or 1.5% risk. The same rules apply in terms of using that 0.5% strategy, right, that we did enter the new week with, right? But because we are in profit on our personal account, we can now up this 0.5% risk into like a 1.5%, right? Because that would give us that same 5 or 6 trading opportunities to really capitalize on any gains that we are looking to make, right? So 1.5%, we do the same thing over and over if we are using a personal account. This would deviate, however, from a trading or funded account, because on a funded account on any given week, you do have a maximum of you have a maximum of a 5% risk per day and a 10% drawdown overall, right? So you have to be a little bit more careful on a funded trading account, but on a personal account you could be a little bit more lax and you have more opportunities in order to scale your gains as you continue and progress forward, right? So this is my trading strategy, how I use my risk management, my dynamic risk management strategy in order to really maximize my gains on any trades I do take, and also protect my account balance if I do run into losing trades or losing days or weeks or whatever. Haven't done that as yet, but again, if it does occur, if it does occur, then using this strategy, then that would be no issue at all if we do encounter that. And this is something that anybody can implement. I have not seen anybody done this, so this was a strategy that I've created for myself, and it really works. It really helps. So you could take this, implement it each week. You start with a 0.5% risk with a 3% risk overall, right? So you provide yourself 6 trading opportunities. You gain on those trades, you capitalize on them, and now you're able to up your risk and keep on trading for that week. So for building your capital, getting more yields as you continue and progress forward. Right, guys? So hopefully this was informative. You gain some knowledge off of this, and you're able to follow along here. If you do have any questions, leave a comment in the description of this video. Also, the Discord group link would be available in the description and first comment of the video as well, for anybody that is interested in trading in Discord and see how we take our trades there, how I take my trades personally. And you could become a member of the VIP for $80 a month, and be profitable with the group, right? Have nothing but so far good things been going on. So yeah, you could come and see for yourself. Does this guy know what he's talking about, or does he not? And gauge for yourself whether this is something that is profitable for you or not. Right, guys? So have a good day. See you next one. Leave a like, leave a comment, subscribe for future updates. Peace.